Okay, this is problem 4-2A. You can find it. It starts at the bottom of page 185, and most of the information is on the top of page 186. This is very similar to exercise 4-7 and 4-8 because I'm asking you to only do parts C, D, and E and disregard parts A and B. So let's see what they give us. They give us same thing, an adjusted trial balance, and they give us all the balances, the cash, the liabilities. We have the owner's equity accounts here, and then we come down. I have my revenue account, my expense accounts. All right, and they're not trying to trick me by sticking anything out of order. Okay, my adjusted trial balance is in the order that it should be. All right, the first closing entry, right, this problem, they want us to prepare the closing entries and then prepare a post-closing trial balance. So obviously, if I'm at this stage in the cycle, I already prepared my financial statements, and now I'm going to close out my temporary or nominal accounts so I can start new, fresh for the new year. And let's see, the accounts, my temporary accounts are these right here. If I go down my adjusted trial balance, I have the drawing account is a temporary account, the revenue and expense accounts are temporary accounts. All right, so let's start. The first entry is to close out the revenue account. If I look over in my adjusted trial balance, I have service revenue of 77,800. It's a credit balance, so in order to close it out, I need to debit it. So let me debit service revenue, and then we're going to use the one account that I told you only appears when we're closing out our temporary accounts, and that is the income summary account. So during the course of the year, this income summary account will remain zero, and then when we're journalizing our closing entries, we're going to use this income summary to just dump our revenue and expenses into. All right, so here's my first entry. I'm crediting the income summary account by 77,800. So let me put that in my T account. It's a credit, 77,800. I'll tell you why I have that highlighted in yellow. As soon as we get through most of these closing entries, the logic behind that. All right, so here, the second closing entry I want to make is the expense accounts. So let me come down over here. I'll look at the account titles. I don't have any prepaid expense. Even if I did, that would be an asset. That's a permanent account. Assets are permanent accounts. If I look at the titles, here's an expense account. It doesn't say anything about being prepaid. It says advertising expense. I know it's an expense. Supply expense. I know it's an expense. Depreciation, insurance, salaries, interest. They are all expense accounts. So I'm going to close them out. They have a debit balance. That means I want to credit them for the respective amount. All right, so if I start that journal entry by crediting those expense accounts for their applicable amounts, if I total this up, I get 67,700. That's the amount that I want to debit my income summary account for. Because remember, every transaction has a debit and at least one credit, or vice versa, right? This right here is a simple entry. The first one that we made here is a simple entry. This one here is a compound journal entry because we have a bunch of credits, and then we'll have this one debit. But regardless of that, my debits and credits will balance for that transaction. All right, remember all those rules. Okay, so that's my second entry, closing out my expense account. So let me put that amount in my income summary. That's 67,700. Okay. Now, finally, I still have two more entries to make, but I want to close out my income summary, and I'm going to close that out to my capital account. So before we make the entry to close out the income summary, what I need to do is find out what's my balance. What do I need to do here? And my credits are greater than my debits, so that means I have a net income. But let me get that amount. Okay, I'm going to subtract my credits from my debits. And so this right here is just giving me the net amount here will give me a credit of 10,100. Okay, the reason I have this not highlighted is because it's just giving me a balance. It's not an entry. I'm not posting anything. I'm just getting a balance of what my net credits and debits equal. All right, so I need to close out my income summary account. It has a credit balance currently, right? If I look at these two amounts, it has a net credit balance of 10,100. So in order to close that out, I need to debit my income summary account. And the account that I'll credit is the capital account. So let me post this entry. So my income summary gets debited by 10,100. And if I were to add my debits on this side, what I have highlighted, the 67,700 and the 10,100, and I subtract my credit of 77,800, I'll come out to zero. That'll come out to zero. This amount here was only to get a balance, so I didn't want to confuse you. I think I need to stress that in class so that you know that what I was doing here was just to get a balance of these transactions. All right, so everything highlighted, that's why I highlighted these three numbers. If you were to add them, it'll come out to zero. All right, so I posted the income summary there, and now what I want to do is post this 10,100 to the capital account. First of all, I want to get this balance off of the adjusted trial balance for my capital account. So I'm going to come down here. I have another T account. Here's my capital account, and I'll do the 36,000. Right, and then I'll post that entry, which was the 10,100. Okay, now the final closing entry is to close out our drawing account. So obviously B. Porter, the owner of this company, decided to withdraw 12,000 of his original investment in this company. So he's taking 12,000 out. I want to reflect that in my capital. So in order to zero out this drawing account, I'm going to credit it for $12,000. And the account that I will debit is the capital account. When we deal with the drawing account is not considered in the calculation of net income. That's why we do not close it out to the income summary. Right? Income summary is summarizing your income. Hopefully you have income. But we could call it income or loss summary because you may have a loss, right? It'll be summarizing your loss. But anyway, all right, let me continue. I'm going to post this entry to my capital account. It's a debit of 12,000, so I'm going to come over here to my T account. I journalized that transaction, that closing entry. Now I'm going to post it to my general ledger or my T account. And now I want to get a balance in my capital account. And I do that by adding up my credits. And this is a good thing. My credits are greater than my debits. Okay, so I have a net credit amount in my capital account of 34,100. So that's good. That's my equity, right? I built equity in this company. All right, so the final step in this problem is to create the post-closing trial balance. I already closed out my revenue, expense, my income summary, and my drawing account. Those are my temporary accounts. So now I'm going to come here. If you notice on the post-closing trial balance, these are my permanent accounts. Here's my assets, my liabilities, and then I have my owner's equity, my capital account. I'm just going to take the amounts right off of the adjusted trial balance for the assets and liabilities. And if you remember, this is kind of what we did to create the balance sheet, right? Same exact thing. We took the balances off of the adjusted trial balance, and then for our capital, we looked to the owner's equity statement. Well, if we look down here at our T account, when we actually closed out all the temporary accounts, we're coming up with our ending capital of 34,100. And this is exactly what our owner's equity statement has, right? It has the beginning capital of 36,000. It has, we add net income to it, and we subtract out our drawings, and we get a net amount on our owner's equity statement of 34,100, and that's what I would plop in here because that's my ending balance. I have it there. Let me go back in, and 34,100. So if you look here, my my post-closing trial balance is in balance. It has debits of 85,700 and 85,700, and that's it. We're good. So that was problem P 4-2A.